attractive risk-free money market rate above 5%, we're seeing income investors start to be dissatisfied with getting that 3 or 3.5% dividend yield and looking for kind of larger income streams from their ETF income allocation. We've got a variety of solutions that help investors out in that form.
Yeah, and I mean, it's no wonder that investors want to take advantage of this. A couple of yours are yielding 8 to 12%, and it certainly has gotten investor attention in 2023. Let's kick it off and talk about the Amplify Cash Flow High Income ETF, ticker HCOW, of course, listed on Nasdaq. What are some of the benefits it provides to investors?
Yeah, so HCOW is really unique in the sense that it owns dividend-paying, high free cash flow stocks. Some of the best blue chip companies out there when you look at stability, because not only do they have high free cash flow or a lot of cash on hand, but they're also sharing that cash flow with investors in the form of dividends. So 90% of HCOW's portfolio is invested in those stocks. 10% is in a call income strategy on the S&P. So you get the dividend income from the stocks, you get the option income from the call income strategy, and that's what gives you that 8.5% yield, while still staying high quality and blue chip in nature, which we think is very, very important in a market that has a fair amount of geopolitical risks going on right now.
Right, and another ETF that's been popular this year and actually tracks the Nasdaq index has been the Amplify High Income ETF, ticker YYY. Tell us about that one.
Yeah, so YYY tracks a Nasdaq index of 45 closed-end funds that are income-oriented. It uses a rules-based index methodology to select these funds each year, and it yields just over 12% right now. So we're seeing, investors want to increase their yields and do so kind of in a diversified way. YYY provides access to closed-end funds that are managed by Nuveen, BlackRock, Franklin Templeton, many of the best-known managers of the world, but it's buying these closed-end funds right now at a 7.8% discount to NAV. So historically, closed-end funds have traded around a 4.5% discount. That 7.8% is a lot larger. We've seen it as high as 10 in the recent months. So there's also the appeal of capital appreciation should discounts go back to historical ranges. So that high income with potential capital appreciation with discounts evaporating.
And finally, Christian, how are advisors using HCOW and YYY in portfolios?
Yeah, so on the HCOW side, we're seeing traditional dividend ETF investors maybe increase their income from maybe a 2 to 3% level to an 8.5% level and still own high quality stocks. So either a complement to dividend ETFs or a replacement. On the YYY side, because of the 12% yield, we're seeing investors who just need more current income allocate 10 or 20% of their portfolio to YYY in their income sleeve in order to boost their income quite a bit, sometimes by 2 to 3 times. So we think both of these are unique ETFs that are all based off either Nasdaq indexes or listed on the Nasdaq, and we're proud to be part of the Nasdaq family.
All right, Christian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.